obviously you have a new administration that's got off to a bumpy start, and a president who defied the pundits by winning the election, and whose agenda for change is quite unorthodox, if I could use that term. And so we'll have to see how that sorts out. The markets seem pretty upbeat on the U.S., the financial markets, particularly the stock markets, but I think a lot of companies and investors will be sort of sitting and waiting to see what Mr. Trump does on taxes, on trade, on immigration, and on infrastructure in particular, because all of those things will bear on the growth potential of the U.S. economy over the next 2 to 3 years. And it'll help to clarify whether we're going to get into some sort of a trade war between the U.S. and Mexico and China that we could get caught up in inadvertently. Canada's not the target of U.S. anger on trade, and Mr. Trump said that actually at the meeting with Prime Minister Trudeau this week. But nonetheless, we could still be affected by what unfolds. So there's that. There's also a lot of uncertainty about the future of Europe, not only because the UK is in the initial stages of leaving the European Union, but also because there are elections coming up this year in several of the big European countries where the future of the euro, I think, is really going to be one of the key issues in debate. So Europe is, 20% of the world. So the structure of the Eurozone and the kind of architecture for the single currency and so on does have implications for the broader world, even including Canada. So that's another kind of uncertainty we're facing. We don't produce oil, and so we're not hit the way Alberta, Saskatchewan, and Newfoundland were by the tremendous declines in oil prices in 2014, 15, and indeed all the way through the first quarter of 2016. And in fact, we're a net consumer of oil, not producer. So arguably, we might have even benefited a bit from lower prices. But so that's number one. Number two, we've got an economy that's been fueled by housing starts, housing investment, real estate transactions, also by demographic growth. Our population is expanding about 1% a year, which doesn't sound like much, but a lot of provinces are actually close to zero. So we have stronger population growth. That creates demand for housing, demand for retail goods and services. We also have seen strength in tourism's had a couple of really strong years in BC. The high-tech industry is growing very rapidly. Film production has been running at record levels, film and TV production. We've seen even lumber and pulp have actually been quite strong, notwithstanding the question mark over the softwood agreement. And even in 2016, mining and minerals came back after a 5-year slump. We saw zinc prices, coal prices retrace some of the losses that they'd made earlier. So all of that fed into a relatively strong economy in the province, leading the country in the last 2 years in growth. We've seen investment in office towers and some retail complexes. The Tuason Mills project, that's over $1 billion that was executed successfully in 2016. But some indicators of what we as economists would call capital formation have been quite weak. So this is investment in plant, factories, equipment, technology, intellectual property products, things that we need to build in order to really set the foundation for higher productivity and improved competitiveness. So it is an area we're doing some work on, and we have been urging the government to pay more attention to improving the investment climate for those kinds of investments, because that's really where BC's been lagging. And it's not, we don't have all the explanation as to why that is. Taxes are a part of it, but it goes beyond that, I think. When it comes to the job market in BC, it has been a bit of a tale of two economies for the past few years. It's really been almost all of the net employment growth has been in the Lower Mainland, a little bit in southern Vancouver Island in the last year or so, and most other regions have been flat or even declining. Part of that is demographics. So when you think about population growth in British Columbia, it's preponderantly being driven by immigration. And immigration is overwhelmingly in the urban centers. 90% of new immigrants to BC settle within 100 kilometers of downtown Vancouver. So that's one factor. And then the second is the commodity cycle. The regions outside BC are more exposed to the ups and downs of coal markets, lumber markets, pulp markets, seafood markets, energy markets. And we've gone through a 5 or 6 year period where there's been weakness in a number of those commodity segments, and that's had quite a negative effect on the interior, the northeast, the northwest. Even though people are talking about LNG in the future, LNG doesn't exist right now. So it will take an improvement in the commodity cycle from a BC perspective, I think, to turn things around for a lot of the regions of the province. The government can help a bit with infrastructure investments and ensuring that there's a stable foundation in place for some of these communities to weather the storms. But ultimately, it's really not up to the government. The government doesn't control whether the caribou is growing at 1% or 2% or minus 1%. It's very difficult for policy to really influence that.